Hey traders, welcome to a three-part trading series about reversals. Here in the United States, it's Independence Day, so if you are here in the United States, I want to wish you a happy Independence Day, and for anyone around the world, happy Independence Day to you. That is the reason that we decided to go ahead and release this three-part series on trading reversals. I think it's going to be extremely beneficial for any of you who are struggling in the markets, and I'm extremely excited to get started. Now, first off, as you can see on this page that you're on currently, we have some major sales happening right now. Here in the EAP training program, we're essentially knocking about 70% off of the yearly price, and we're also going to have a huge discount on the lifetime EAP membership. So if you're interested in either of those two things, scroll down, check out what it's all about, and take advantage of those discounts for the next probably around 48 hours. Now, getting back to the reversal strategies we're going to be talking about, what we're going to do is over the next 3 days, teach you guys an entire reversal strategy. We're going to start out today with the essential part of a strategy, which is reading and understanding structure. Without this part, it's going to be very difficult for you to become successful with any strategy in trading if you don't understand structure levels. So this is going to be an essential stepping stone for understanding the rest of the lessons we're going to go through over the next couple of days. So today, we're going to focus mostly on structure, how to identify structure, how to really keep the noise from affecting the way you trade. What do I mean by noise? The chart right here, I think, to the side of my face is the euro dollar, and a lot of people really don't understand what to do when a market starts doing things like this. We have all this noise here, we have a little bit of noise here. Consolidation, really, instead of noise, would be a better way to describe it. So I'm going to teach you guys how to stay out of consolidating markets, how to determine when a market is likely to reverse. Tomorrow we're going to talk about an actual strategy, and on the last day, the third day, we're going to talk about the entry reason we're going to add and the stops and targets we're going to use for the strategy that we've created. So today, focusing on deleting the noise out of your market analysis, discounting consolidation, and figuring out when a market's likely to reverse. Tomorrow, we'll be going over the actual strategy, then entry reasons and stops and targets on the last day. So I'm eager to get started. Let's go ahead and start talking about structure. And at any point you'd like to pause the video, you can scroll down and we have some testimonials listed from other people who have been a part of the EAP training program. Again, if you're interested in that, we're going to have a discount going over the next around 48 hours or so. So check that out if you get a chance. Otherwise, let's go ahead and continue talking about reversal trading. So here on the euro dollar, you can see this period of consolidation that we have in through here. And before we even get started looking at charts, let's go up to a blank chart, right? So whenever we're looking at a trending market, especially if we're trying to determine when a market's likely to reverse, if we're looking at starting to trade a reversal strategy, what we want to make sure we understand is two things: trend and structure. We definitely need to understand trend, because in order for a market to reverse, this is something a lot of traders don't realize when trading a reversal strategy. If the market's going to reverse, it's pretty necessary that it's been trending before it starts to reverse, right? So what we need to see before looking for any type of reversal trade is a trending market. Now that leads to the question of how do we determine if a market's in trend? Well, today we're going to discuss some solid rules for identifying trending markets, how to stay out of consolidation, and how to spot when a market's likely to reverse. So let's go ahead and keep going with this lesson. Here we have a move up, a move higher, a move higher. Now, normally, a big problem I see with traders understanding trend. This would be an uptrend, but what happens if a market does this? Now, after this move right here, is this still an uptrend? This is a question I get asked all the time, and this is a big problem I see with a lot of traders. They don't understand how to deal with this type of market situation. The way that we're going to be identifying trend in this lesson, and the way you should be identifying trend in your own personal trading and with all your strategies, is paying attention to the previous swing high before the break of the last resistance level. So right here, this was our last resistance level. Right here, the swing high before the break of that level. So the fact that we have a swing high, that right there, that level that was just broken, we look at that previous swing low, right? While looking at this previous swing low where we just drew our dotted line, it's important to realize that until the market breaks and closes below that swing low, this market is still considered to be in trend. This is how to correctly identify a trend, guys. So this market, although we have been making moves lower, this is all part of a pullback. Every bit of that is part of a pullback unless we break and close below our previous level of structure support if we're in an uptrend, and that structure support level that we're paying attention to is the one right before the break and close of our last resistance level in trend. Now we're going to go down to charts and study a little more on this. It's going to be a little bit easier to understand once we do, but let's go over this one more time using a downtrend for an example this time. So in a downtrend, we have a market moving lower, breaking into new lows, breaking into new lows, and let's say we have a move that looks something like this. Is this still a downtrend? We've broken this little resistance level, so is this a downtrend or an uptrend? Well, this is still considered a downtrend. Let me tell you why. Using the same example as what we just looked at. We're waiting for the market to break below lows. Here is the last support level the market broke below with this impulsive move, right? This impulsive move broke below that structure level. Since we have that, what we're looking at to identify trend is the last level of resistance, the previous level of resistance, highest resistance before the break of that support level. Hopefully this is starting to click now. It's starting to make sense. So we break below that. Anything pushing up, anything in this area that does not break and close above this resistance level is a pullback. Guys, this is just all a part of a pullback. It can be an advanced pullback. We could see an ABCD pattern in this area, 3 drives pattern all the way up to this resistance level. We can see as many breaks of resistance or support in through here, and it's all considered consolidation. It's all considered a pullback. This, guys, is how you stay away from noise when trying to identify trends in the market. All this noise in between here, let's say a market continues moving around in between here, we're still in a downtrend. We're still likely to break that low during all of this consolidation. And the reason is because we have not come up and broke above this resistance level. So now you probably have a pretty good handle on what we're going to be talking about throughout the rest of the video. We're going to go down and take a look at this on some charts, and then we're going to talk about a rule we're going to use to identify when a market's likely to reverse, or not really when it's likely to reverse, more so identify when we want to start looking for reversal patterns. So let's go down to charts and check this out. And let's go to this period of consolidation right here. This is a place in the market that a lot of traders would get confused, right? We have this high here. We have some consolidation, support levels, and resistance levels right here. Well, if we start identifying trend the way we just talked about, then this is what we end up having. Let's go ahead and do that. We have a move up from here, pushing the market higher. A pullback, a move up. Now, what is all of this right here? What did we just discuss? What did we just talk about? All of that is noise, right? All of that is just a pullback until we break and close below this support level. So since we have all of this noise, really this is just a pullback. This entire thing here is just a pullback. We're going to label that with PB. That was a weird way to draw a B, but anyway, bear with me. So we have this pullback. Next, what do we get? Well, we're paying attention to this support level to see if it gets broken, because if it gets broken, then we're going to see a possible reversal. We're also paying attention to this level of resistance because it's the highest level of resistance price action has made it to so far. And what happens next? Next, we get this break and close right here. This is a break and close above resistance. I'll go ahead and delete some of this drawing. So what we have is the pullback. Remember, we have the move up. Now we have the pullback. Now we have the break and close, because this right here broke and closed above the previous highs. We have that break and close. Then we have what? Another pullback. As this market pulls back, see if you can determine what you should be paying attention to. So hopefully you were able to spot this level of support. Why are we paying attention to this level of support right here? Well, because this is the level of support lowest before we broke our previous resistance level. Let's do that again. I know this can get confusing at times, especially if you're a beginner, and I want to make sure it's really clicking for you. As we push up, break and close above, we push down in this pullback, hit support, get supported, break and close above. As we break and close above this level of resistance right here, what we have to do after that break and close is pay attention to the previous support level right here. And what we are going to determine is that unless this market breaks and closes below this previous support level, we're still considered in an uptrend. All of this is considered an advanced pullback. Okay, so that's identifying trend. Now we have this advanced pullback. What happens afterwards? Of course, we get this push higher. And I'm going to have to delete these drawings, guys. But as you can see, I'll go ahead and redraw them. Push up, pull back, push up, pull back, advance pullback, coming down to retest support, push up, pull back, push up. Now, this is how you want to go about identifying trend, okay? I know that was pretty speedy. Go back through and rewatch the video if you have to, but this is what I wanted to discuss in lesson number 1. Now, another thing we're going to discuss in lesson number 1 is when can we go about identifying when a market's ready to reverse? Well, what did we discuss at the very beginning? In order to identify a market ready to reverse, the first step is that that market is previously in trend. You don't want to be trading reversal patterns if the market's just in a period of consolidation. If it's going to be a reversal, you want to make sure that the market's been trending for a decent period of time before that reversal, okay? So what we're going to be doing with the strategy we're going to teach you on lesson 2 and lesson 3 in the next couple of days is we're going to be talking about the amount of times a market does this, right? The amount of times we have an impulsive move followed by a pullback, an impulsive break of structure, break and close, followed by a pullback, followed by an impulsive break and close above resistance. All of these combined, what we want to see is 3 of these. We want to see at least 3 instances, and I'll delete this and go up here to a white chart. We want to see at least 3 instances of a market pushing up, pulling back, pushing up and breaking resistance. We can see an advanced pullback in through here, something like that, and then a push up and break of resistance again. This pullback, a push up, break of resistance again. So we have 1 break of resistance, 2 break of resistance right here, and 3 break of resistance. We want to see all 3 of these before looking for a possible reversal trade. So we want to see this 1, 2, 3 trending market, and then we're waiting for our reversal trade. That is so sloppy when it comes to writing out reversal, but anyway, you know what I'm trying to say. So before looking for the reversal trade, it's important to remember that we want to see 3 breaks and closes. We want to see 3 levels of trend before looking for a reversal trade, and we just discussed how to identify that trend. I hope that was helpful, guys. That's lesson number 1 out of 3 of reversal trading, which we're going to be talking about over the next few days. And again, guys, if you thought this information was valuable, the EAP training program, full of this kind of information, full of completely rules-based, easy to follow, yet really, really effective strategies. And not only that, in that program, me and you, we can build a trading plan side by side together. That's what some of the video lessons do throughout the transition course. And as an added bonus, guys, you get email analysis 3 to 5 times a week. The email analysis has performed great so far in 2017. We climbed out of a drawdown from earlier in the year, and we're currently up a little over 40% based on the emails in the email analysis program. I'll slap a screenshot of our equity curve on the screen somewhere. Also, guys, remember, scroll down if you need a little more proof that that program can be helpful to you. Scroll down. There are hundreds of testimonials from traders who leave comments on our YouTube channel, send me emails, leave testimonials on our website about how the EAP training program has helped them. And guys, this discount is ridiculous. We're offering 70% off of the yearly EAP training program. That's putting the price of that at under $550. So for less than a car payment, you can end up in a program for a year that can help you on your journey to financial independence. The lifetime membership is only $897 right now. The normal price of that is $1,497, guys. Save big if you've been planning on it, or if you've been hesitant about joining the EAP training program. Even if you've never heard of it, but you got value out of this video and you want to see how much further we can go together with me as your mentor and you accomplishing your goal and improving on your journey to becoming a profitable independent trader. So guys, click the link below if you're interested in taking advantage of one of those discounts. I think the pricing tables are down there somewhere. And guys, your trading success is going to depend on what you know. Let's be real. No one was a great trader as soon as they were born. We've all had to learn how to do it from other people. All successful traders had to learn from someone on how to become successful, or learn from themselves when it comes to testing strategies throughout the market. I've done the hard work. I've already tested strategies. I'll give you guys some of my favorite pairs on the strategies we use throughout the program. And I don't know if you can tell, guys, but I'm extremely passionate about helping traders get to a point of financial freedom in their lives, because this is something that has completely changed my own life, and it's changed the lives of other traders before you. Again, check out the testimonials and comments we have below. So I'm extremely excited to offer you guys these next 2 lessons coming up over the next couple of days. Consider the EAP training program as your next investment. Go ahead and save up money for it if you don't have the money right now. And guys, if you're already in the EAP training program and you'd like to upgrade your membership, if you're in the monthly or quarterly package, you'd like to get the discount on yearly or lifetime, I'm more than willing to do that. Just shoot me an email, at steven@thetradingchannel.net. I look forward to seeing you guys on the inside. I look forward to seeing you guys tomorrow for lesson number 2. I wish you the best of luck on your future trades, and I'll talk to you guys very soon.